So for now, the market certainly could care less and thinks I'm an idiot for even viewing this as a mild concern, right?
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
Everybody, welcome back to another edition of the Daily Dots here on Monday, September 22nd. Chase flying solo with you today. I'll hit the markets, and then I got a few things to touch on. A couple bigger, interesting notes, but not a whole lot today, so this might not run too long. Another day, another green candle for U.S. equity markets. You had the S&P up 0.44, Q's up 0.48, IWM. Russell 2000 up 0.58. Another day, though, of equal weight being down. It was down 0.39, and it's kind of struggling to put in a new high, while the bigger indexes with the cap weighting do not struggle to put in new highs. Max 7 was up 0.72. The rest of the world was up 0.34. The dollar was down again. You were down 0.34. You're at 97.31 now. One notable thing to me today was Bitcoin was down 2%, while gold was up 2%. And that has been a fairly consistent theme in recent weeks, and if not months. I was kind of thinking that ratio could bottom out, and you could see crypto Bitcoin picking up a little bit versus gold, but not at all how we're starting the week. Gold miners were up 2.7. You had silver up over 3%. Palladium up 4%. Basically every metal was up on the day. Kind of a good day for commodities in general. You had oil pretty flat, but as far as Mag 7 went, you had Apple up over 4. You had Nvidia up about 4. Tesla up another roughly 2%. You're pretty close to where it would be an all-time weekly closing high on Tesla. Vol was up a little bit today. Kind of interesting given that whole backdrop, but from month VIX futures, for whatever reason, we're up about 2%. Spot VIX up about 4. In China, we sort of had some interesting, the regular kind of large cap ETF was down about 0.7, but then you had the tech stuff up almost 2%. So I found that to be a little bit interesting as well. As far as kind of data, we had virtually nothing today. On the week, we have home sales kind of Wednesday, Thursday, I think it is. We have personal income, personal spending coming up towards the end of the week, and then we'll get the PCE inflation data, and that's expected to be 2.9 on core and 2.7 on the headline PCE. The big news for today was probably the fact that NVIDIA is going to invest $100 billion into OpenAI. I think we've all known this for a while, but today kind of just slapped me in the face just how incestuous the capex is in the whole AI market, the whole AI build out. So we have NVIDIA giving $100 billion to OpenAI, who's one of their biggest customers, essentially vendor financing. OpenAI loses a ton of money. Their revenue this year is going to be about $13 billion, and they're going to lose $5 billion. So they're going to spend 18 to make 13. And yet they signed a $300 billion deal with Oracle. And at the end of the day, Oracle is going to package some NVIDIA chips and do some other stuff, right, to do this for them. So NVIDIA giving $100 billion to OpenAI, OpenAI giving $300 billion to Oracle, Oracle giving some unknown amount back to NVIDIA. So we're getting this like circular relationship where, one company's capex is the other one's revenue, and then their revenue is the other company's capex, and it's just like I said, incestuous is the only word I can think to describe it. And just not to say it's not legitimate, like, OpenAI really is obviously making a bunch of powerful models that require NVIDIA chips. So it's not like it's totally fake demand or something. Like, everyone's getting on ChatGPT and using it, and because of that, and they're trying to make it better. They really do need the chips, but still, it has to be disconcerting to people that NVIDIA has to vendor finance so much of this, or that Oracle Oracle's equity is popping because OpenAI is going to give them a bunch of money that OpenAI doesn't have. Now, OpenAI is getting a bunch of money, but you know, if Nvidia has to give them 100 billion, does that mean some of their money from Silicon Valley or from Masasan in Japan is like starting to go dry? If you get to the point where the only financier left to give some of these companies the big checks is, their their big their biggest provider of hardware, like I don't know. At some point, this becomes really risky to Nvidia that they have to finance all their own customers to buy their stuff. Like that feels like a poor business strategy. Like at some point, why shouldn't we just net that out, right? Like, is it all net profit if you have to turn around and give it back to the people? Like, are your margins really what they are if you have to also pay the people buying it? Like, if you just think about this from just like a business 101 perspective, it's obviously a little bit worrisome. But that being said, the market not only could care less, but sees this is all good. So what I see is incestuous capital markets and worrisome trends of some self-dealing almost. Like the market sees it all as good news. Like Nvidia's up today, right? Oracle was up when they said OpenAI was going to give a bunch of money that OpenAI doesn't have. So anytime there's news like this, or one of the hyperscalers says, "Ooh, yeah, we're going to do more capex than we told you last quarter," the market goes, "Hooray! Like you guys are going to spend more money. This is great." And hey, it'd be even better if you had to borrow it, the way Meta is, maybe. So for now, the market certainly could care less and thinks I'm an idiot for even viewing this as a mild concern, right? But for me, I do view it as a concern. I know for me, if I was running a business and I do run a business. I run a research business. If I had to turn around and provide, investments into all my clients so that I knew they could keep paying me, I would realize I had a very, a business model built on quicksand. Like I don't know, maybe I'm the crazy one. Another thing I wanted to talk about, and you guys know, I've been hammering home the point that the tariffs we have as structured right now are troublesome for domestic manufacturing. The onshoring of industry and manufacturing that we want to do is very difficult because things cost more. Like you just made everything cost more for people to produce and manufacture here because it's input costs and intermediate goods. I think you're starting to see some evidence that this is starting to hurt folks. We have First Brands Group, which is an auto parts dealer that manufacture. They're discussing bankruptcy right now. Now, I'm not here to pretend that tariffs are the reason for this. It's probably a mild input, totally fair. But I have no doubt that First Brands came into this with some financial frailty that could have been exposed by anything. But at the same time, when I think about their input costs going up to make auto parts, and then the auto manufacturers that they sell to, or the parts stores they sell to, having their own headwinds from everything costing more. Like I do think it was an input that was an issue. And for a company called Lucerne in Detroit, same thing, same industry. It clearly was a major factor, and they said as much. They were going to build a $50 million factory in Detroit. It was going to create 325 jobs, but tariffs driving up the costs made them cancel the whole project. And I think you see this kind of writ large as since Liberation Day, we've lost over 40,000 manufacturing jobs. And these are, manufacturing jobs were climbing right up until Liberation Day. And then we're in a drawdown of over 40,000. Not a coincidence. And I think this stuff's going to keep getting worse. So we have to, hope that things like housing can start to put in a very real bottom, and that consumption stays robust so that manufacturing doesn't just rip us into, and construction doesn't just rip us down into a recession. The stock market is doing its job. Like as we've talked about a lot, like there's no way shouldn't say no way. The probabilities are low of entering a recession if the market's at or near, an all-time high, just because the consumption is so hard to dent, especially while you have, 6 to 8% of GDP deficits going on at the same time.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
Another thing today that was interesting was Argentina. Argentina's been struggling mightily since their Buenos Aires elections that were a hit to Milei and his party. And for those that don't know, like a third of people or whatever it is in Argentina live in that province. So as Buenos Aires goes, in a way, so does Argentina. But they have next month we get the midterm elections there that are going to kind of determine this fate. They borrowed an insane amount of money from the IMF. They have major currency issues. They don't have enough dollar reserves, enough hard reserves of any sort, and that makes things very difficult for them. They're trying to keep their currency up while keeping inflation down. They did a good job of going from a nasty deficit to a surplus with the federal budget, but that also hurts some other areas. They're trying to keep the peso from not strong outright, but strong relative to where it would be on its own. So they borrowed all this money, and now they're blowing it to defend the peso. And so now their current account is worse than it was supposed to be per the IMF. Their reserves are worse than they were supposed to be per the IMF. So all of a sudden, it's starting to look like it's going to be very difficult for them to defend all the different things they're trying to defend at the same time. Frankly, it looked like they were going to have to let the currency go, unless they were going to go rip through all their dollar reserves just to defend it, which doesn't really make any sense at all. But today, Scott Bessent rode in on the right white horse, basically said, like, we'll do whatever it takes to help them out. And it sounds like anything from some swap lines to outright buying their currency. That seems like a tough sell to me. Like, maybe we do it, but if we are going to outright go and buy pesos, like, we're going to lose money on that bet. Like, full stop. Like, there's not really a world where we're not losing money on that. And that offers to me, some negative incentives. Like, it incentivizes them to do things they probably shouldn't be doing, to live up to, this IMF deal and just what they should be doing, period. But at the same time, it's sort of like a lender of last resort role. You think about like the Fed having to step in when there's a big bank run or something, like where maybe the fundamentals aren't that bad, but the doom loop, the reinforcing cycle starts to fire off, and there's if you don't step in, that thing's gonna just burn itself out. We had to reach that point in Argentina where if we didn't step in the U.S., the currency was going to go. They were going to lose reserves. They were going to start losing growth. Inflation was going to come back. Like the whole experiment since Milei won was probably going to go up in smoke, unless his party did really well in October. But with the economy starting to go up in smoke, are you really going to win the election? Probably not, right? So I think from that standpoint, just coming out and forcefully saying stuff is a great strategy, because this can help them avoid that doom loop potentially. Now, if the elections still go poorly in October, they probably still have a big problem. And then if the U.S. is jawboning but doesn't actually come through with something significant to backstop this, then they're probably still in trouble. So that's gonna be interesting to kind of keep an eye on. Argentina's ETF for the country was up about 5% today, but it's still, despite that, the worst performing in the whole world year to date, down about 10%. So just getting throttled, by stuff in Europe. Still really good returns over the last 2 years. But some of the luster has worn off. Essentially, Milei, and he said this himself, like, basically already hit all the easy buttons. Now it gets hard. All the low hanging fruit was picked. Now we got to get up and get the stuff at the top of the tree. It's very difficult, very dangerous, and that's kind of where they're at. So keep an eye on this. We'll keep an eye on this election next month. I was getting excited because Argentinian stocks were too expensive because too many people in the U.S. Really liked the story and went out and bid this stuff up to where the average holding inside of that ETF was like 25, 30 times earnings. And some of that's because it's heavily weighted on, one giant e-commerce company that's like 50 times earnings or something. But even there, like, banks and energy companies trade on par with, American banks and energy companies, where almost the rest of the world, as we've outlined here in the show a lot, most of the rest of the world, like if you want to go buy their bank or their airline or their energy company, you're going to get it at a huge discount to what it would be in the US. That's not really the case in Argentina. So I was hoping, hey, like maybe this sell off can like get pretty big and all these assets start to make sense again. Then if you see like, all right, well, the assets are in free fall, but it looks like maybe Malay could have, if it looked like he could still land the plane, then it would have made a really nice buying opportunity. I think the U.S. coming in and backstopping them here at this point may make that a little more dicey and just impossible to go in and get them at a good enough price. Is kind of the way I see it. One other just kind of last thing, it's something I spent the weekend researching and writing about, and then today doing the same, and that is it's kind of the defense industry globally. If you're not tracking what's going on in Eastern Europe, and I think a lot of people sadly aren't, Russia has violated the airspace of Poland in a pretty aggressive way, as well as Estonia. Now, there's been other incidences, I think in Lithuania, Latvia, Romania, smaller incidents, but they flew, no kidding, fighter jets over Estonia for like 20 minutes, I think it was, and then they flew their drones, like over 20 drones into Polish airspace, deep into Polish airspace. This went on for like an hour, all in the last, here in September. Some people were willing to write off the Polish one as maybe it was an accident. And then, okay, well, manned fighter jets flying into Estonian airspace is obviously a little bit different. Clearly, at this point, probing missions, kind of see what the response is from NATO. I don't think it makes any sense whatsoever for Russia to actually start anything with Poland, because I think if Poland and Russia had a war, Poland would win, and I think Russia knows that. Theoretically, so I don't expect them to actually get into some sort of all-out war with any of these countries that are near their western border. But I wouldn't be surprised if they kept probing and kept seeing what all they could get away with. The response from NATO, the response from the U.S., the response from Western Europe wasn't that strong. We didn't really do anything about it. Everything we did do was very defensive, not sending a message, not offensive, not punishment, not harsh critique. It was more of a, well, that's weird. That's interesting. Like maybe we'll, send a few more troops or a couple airplanes or something, but like, no one seemed that upset by it, other than in the countries where it happened, because they don't have the luxury of looking at it as not a small deal, right? But that brought up something for me to explore, and that is my emergent view that we're kind of in a world where I think most countries are sort of on their own. I don't think there are too many alliances that would currently withstand something legitimate. So if China were to just decide, like, let's have a war with the Philippines. Technically, the U.S. is supposed to, we have a mutual defense treaty. We would have to go to war with China if that happened. I don't think that would happen. I don't think it would happen with Taiwan. I don't think it would happen if Russia decided they were going to take over Latvia. Supposedly, everyone in NATO has to join in and say, nope, absolutely not. We're going to go to war with you. I'm not convinced that would happen. Now I'm also not convinced Russia's going to do that, because I don't think they're strong enough to do it. But point being that a lot of these alliances are more fragile than I think we all accept or thought 5 years ago, 10 years ago, 1 year ago. And I think that has a lot of, ramifications geopolitically, for defense spending, for fiscal stimulus, period. And it's not just Eastern Europe, it's global. Like, if you're in Southeast Asia, you got to spend more on your own defense. If you're in, honestly, any corner of Earth, you probably have to pick that up. And you have to depend less on just getting your weapons from the US or Russia or China. Like, you probably need to do more on your own, or you need to branch out, buy more stuff from these emerging, manufacturing powers and like cutting edge cheap stuff, which is, Turkey, Ukraine themselves, places like that, where Iran, like, they're building cheap and effective equipment, right? So just as like a loose theme of, maybe everyone's kind of on their own more, and maybe that means they have to do more domestically to defend themselves, but also go out there and buy more cheap weaponry from some of these countries that we don't think of as big arms dealers, right? Big arms exporters of really high tech, high quality, proven in battlefield equipment. But if you look deeply into a place like Turkey, that's them. Like they're dominating in drone exports, and they're rapidly going up the kind of value chain of being able to make their own weapons for things like, next generation fighters and missiles, radar. Like, I'm not saying they're top two or three on the technology side yet, other than maybe drones, or anything like that. But if you think about where they came from, it's really, really significant how much they've moved up. Obviously, China, same story. I think it's clear that Iran's building some pretty good drones that Russia's using at scale right now. Just something to chew on. There are some new products that offer more diversification. I mean, a year ago, I think 2 years ago, definitely, if you want to go buy defense stocks, if you're only trading on U.S. exchanges, you could only buy U.S. defense stocks. Now you actually get out and buy some European stuff, some Asian stuff, that doesn't bring with it just some of the bloated U.S. names that are already expensive and actually may lose out business to places like Turkey in the future. But that was just something on the back of my mind, and I think we do have to keep an eye on Eastern Europe to see if now that Russia's military exercise is over, because they had a big military exercise with Belarus and some other players. Now that it's over, like, does all this end and we can just forget about it until a year from now or something, or do they keep doing some of these small kind of probes to see how everyone reacts to it? That's going to be interesting to watch. Underreported story that I think it bears more of our attention than most people are giving it. But that's all I have for today. Pretty light data week. Not much tomorrow either. It'll be interesting to see if markets just kind of keep grinding higher. If this little small vol move up is more than it was last time. Last time was just a little Fed hedging, but this time there's not like that event catalyst coming up, so it's a little more interesting to see it itself pick up. So far, my concerns about seasonality and stuff like that here, September liquidity, both just nope, absolutely not. Just dumb reasons to be cautious to date. Now, obviously, that can change as soon as tomorrow, but for now, anyone that's being cautious for any of those reasons or any other reason, just it hasn't worked out. So we'll see how the rest of the week goes, but that's all I got for today. Don't forget you can download and subscribe, knowyourriskpodcast.com, and back with more of the rest of the week. Cheers.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.